U.S. stocks end lower as investors await Fed rate decision. New York, Dec. 8, Reuters. U.S. stocks closed modestly lower on Monday as investors adopted a cautious stance ahead of this week's widely anticipated Federal Reserve interest rate decision. The S&P 500 fell 0.35%. The Dow Jones Industrial Average dropped 0.45%, and the Nasdaq Composite edged down 0.14%. Trading volume remained light, a typical pattern in the final stretch before a major central bank announcement. Market participants are almost certain the Fed will deliver a 25 basis point rate cut on Wednesday, with futures pricing reflecting an 89% probability, according to the CME FedWatch tool. Attention has now shifted to the tone of the Fed's statement, the updated economic projections, and Chair Jerome Powell's press conference for clues about the pace of easing in 2026. The market is in wait-and-see mode, said Mona Mahajan, senior investment strategist at Edward Jones. A December cut feels largely priced in, but investors want to know whether the Fed is still on track for 2 or 3 more cuts next year, or if recent stronger data might prompt a pause. Sector performance was mixed. Technology was the lone major S&P 500 sector to finish in positive territory, gaining 0.9%, led by strength in semiconductors and software names. Communication services suffered the steepest decline, down 1.8%, weighed by a pullback in media and entertainment stocks. Among individual movers, Paramount Global shares swung sharply after the company submitted a bid for Warner Bros. Discovery, reigniting speculation of consolidation in the streaming and media space. IBM jumped 3.2% after announcing an $11 billion all-cash acquisition of software company Confluent. Tesla shares fell 2.1%, following a bearish note from Morgan Stanley citing near-term margin pressure. Treasury yields were little changed, with the benchmark 10-year note hovering around 4.38%. The U.S. dollar index edged slightly higher, while gold prices dipped. Investors will also watch upcoming inflation readings, Tuesday's NFIB Small Business Survey, and Wednesday's CPI report, for any last-minute surprises that could influence the Fed's thinking. With the labor market still solid and inflation moderating but not yet at 2%, the Fed has room to cut but no urgency to rush, said Seema Shah, Chief Global Strategist at Principal Asset Management. This week's communication will be key to setting expectations for 2026. Wall Street's major indexes remain within striking distance of record highs hit earlier this year, supported by resilient corporate earnings and hopes for continued monetary policy support.